So we're going to look first. We go to our radar screen from last week. Our buy signal was 84.65 and our structure long, or the trend change, was 84.84. so our position has been long, and right now the dollar yen is trading at 85.84, so we're above about 100 pips on that trade. And if we look at the weekly chart, this is your 84.87. This was our buy signal from last week, and you see the move that came here. This is the big intervention move, and that's why when I saw that on the chart immediately the other day, that's when I sent the email out. The intervention came in. And just to, by a word of caution, tonight, as I said in the blog, if you go back and read the blog, because of the lack of support that the Japanese government has in its intervention efforts, they will always try to make their intervention or intervene in the market at the times where the market is slow. What do I mean by that? It means that because they have a small budget, what they will do is they need to create a big impact with the amount of money that they have. So the way to do that, they are going to intervene in the market when, let's say, the 8 o'clock in the morning Tokyo session is 8 o'clock in the evening Sunday session, which means that all the US traders are basically asleep. So if they are asleep, then this means that the volume in the market is quite light. There isn't too much traders. So if they can come in and buy, there will be nobody on the other side of the market selling. That's how when they start coming in, they will push the market higher with a small amount of money they have, and therefore they will magnify the move. Remember, if you are coming in, you're a big buyer and nobody's selling in front of you, and you want to buy everything in the market, you will be able to bid this market higher. And that's why most of the Bank of Japan's interventions usually happen on Sunday night New York time, Eastern time, or first thing Monday morning Tokyo time. So in coming to us when we're trading tonight, looking in Tokyo, coming to trade the Tokyo session tonight, be careful. If you have a sell signal and you want to go short the dollar yen, make sure that you have your line in the sand very clear on the chart, that if the prices do come above this point, then you are not going to stay short, you're going to close your trade quickly. Okay, so looking at this here, we can still, this is a big buy signal, we have a big move to the upside. This is a normal close. This candle is a normal closing candle, which indicates continuation. It's not an exhausted move, so we can see and we can expect continuation. Let's look at the daily chart. This again is a brilliant chart. It's a beautiful chart, and this is when you see the essence of what price behavior is all about. Remember when I said in the introduction, we have to have a good and a mature understanding of what price is, if there is value or if there isn't value. If you look at this big candle, guys, This is your intervention. This happened 4 days ago, 5 days ago. The dollar yen went up about 300 pips or 3 yen. Then everybody that so-called analyst out there comes out and says, oh, will the intervention be successful, will it be failure, blah 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 blah, and everybody has his opinion, okay, and nobody's putting any money on the table. They're just giving their opinions out. We don't give opinions, we don't speculate. It's not our business. We're here to make money. So my opinion is worthless. My opinion is only as important as the amount of money that I'm going to put in the market. If I can buy 100 contracts, that is the value of my opinion, 100 contracts. If I'm going to buy 1,000 contracts, then that is the value of my opinion. If I am right and I'm buying 100 contracts, and one of you guys is wrong, but you can sell 1,000 contracts, you coming in to sell 1,000 and I am buying 100, even though I might be right and even though somebody else might be wrong, with the size of selling that he's coming in, he's going to take me out of the market and I will still end up losing even though I'm on the right side of the market. So the opinion is only as good as the amount of money that one has in his pocket. So we don't give opinions. So if you look here, this is the intervention. Now the following day the price is held. Okay, let me lower the volume a little bit. Okay guys, I lowered the volume a little bit. The next day, guys, can you hear me well? The next day you see that the dollar yen stood and stayed right near the high of the day. This means that the traders or the market still believe that the dollar yen is going to go higher because there is no selling coming into the market. This sitting right there next to the high is a vote from the market by their behavior that they believe that there might be a continuation to the upside. The following day, alright guys, I'm rating it high. The following day, the dollar yen stayed again near the high of the day. So 2 days after the intervention, the market is voting that we are still looking to go up. Nobody in the market, this behavior that you see on the chart, guys, is telling us that the market does not believe that the intervention has failed. If all of us believe that the intervention has failed and is not going to work, then we are going to sell, because that's the way we're going to make money. If we are going to believe that the intervention is going to succeed, then we're not going to sell. So right here, did they sell or they did not sell? As you can well see, they have not sold. They have not sold, i.e. the behavior of the traders in the market, they perceive that will be continuous intervention, and therefore the high probability that the market should be going higher, and therefore we should be looking at buying the dollar yen rather than actually selling. We will always make a selling point for us to go short, but at this time we're focusing on buying. So where should we buy the dollar yen? So in order to buy the dollar yen, we're going to look at our intraday charts, and as you can see now, the power that came in of the intervention, and it continued for the following day, and it's continued for the third day. So this gives us a very easy or a clean trade. And what it will be, we are going to buy the dollar yen as a new trade. The guys that have the software you can buy on the break of the Tokyo session. If you have a break to the upside in the Tokyo session, you want to be a buyer. If you get a sell out of Tokyo, guys, do not go short. You go short only below the sell signal. Do not go short below the first move out of the Tokyo session. So our buy signal is going to be the 85.92. So my buy signal is going to be, my long point is going to be 85.92.50, and let's see my selling point. If you really have to sell, I mean, if you really are I will go short below the 85.22. You can see that that is my momentum low, as the software has identified. That is my momentum low. So I will go short below the 85.22. As long as the dollar yen is above 85.22 and it's now trading at 85.84, I'm just leaving 60 pips on the table just to be on the safe side. So my sell signal is 85.22. Alright, and let's see our structure points to the long side and the short side. My structure point to the downside is this actual structure point that gave us a buy signal in the first place. So this was the structural long buy, i.e. the price that we bought above it. That means that that is the trend change to the upside. So this now is going to change and reverse its role. It's going to be my structure short. So if it gets below, so as you see here, my structure long is 84.84. That is now going to be my structure short. And right here, my structure long, the next one is the 85.71. Whenever you see a sienna color on my chart, that indicates a structural point. So in this case, the structure long is the 87.10. So what does that mean? It means that if the dollar yen pushes higher up, it is going to move from here and it's going to test or pause around the 87.10. Okay, and if I'm going to go long above 80, where is my long point? My long point is 85.92. Where will I place my stop? I'm going to place my stop below 85.76. So this means I am let's make it 75, which is the market side. So I'm risking 25 points on this trade. So if I go long, my long stop is going to be 85.75. And if I go short at 85.22, my stop is going to be above, again, the 85.75. So my short stop is 85.75. So now to sum it up, we are not going to take the first sell signal out of Tokyo. We're only going to take it if it trades below 85.22. If we can take the first buy, and if we go long above 85.92, I'm going to place my stop below 85.75. If I go short below 85.22, I'm going to place my stop again the 85.75. Okay, now this is the radar screen for the dollar yen, and as you can see, they all now changed into white colors. This means that the positions are flat. So this is where we're going to buy it at 85.92. This is where we're going to place our stop below 85.75. I'm going to go short below 85.22, and I'm going to place my stop again. In this case, the stop is working two rolls, and my structure long is 87 10, and my structure short is 84.84. Okay, that is the dollar yen. So I'm going to save this.